Hey everyone, last week, Federal Reserve Chairman Jerome Powell announced that the Fed would begin tapering their financial asset purchases. In this video, I'll share my thoughts on what this means for commercial real estate. To start, I want to explain what's being tapered, why it was put there in the first place, and the mechanics of the taper. At the onset of the pandemic, the Federal Reserve restarted their quantitative easing program to put more cash into the economy and to help keep interest rates down. Each month, the Fed buys $120 billion of treasuries and mortgage-backed securities. Because they're injecting billions of dollars into the financial markets, this boosts liquidity levels and also puts upward pressure on the price of treasuries. When the price of a treasury goes up, the yield or the interest rate goes down. In January of 2020, the 10-year treasury was at about 1.5%. By the end of March, after quantitative easing started, the rate was down to about 0.7%, and the treasury rate stayed under 1% for the remainder of last year. In 2021, as vaccines started to be used and as the economy began to gather momentum, the treasury rate moved up to the 1.3 to 1.5% range, still very low by historical standards. And as intended, the low interest rates helped boost spending and investment, supporting economic growth. Compared to pre-pandemic levels, core retail sales are up 19.3%. Corporate fixed investment is up about 11.7%. Home sales are up 9.4%. The stock market's up about 45%. And third quarter commercial real estate dollar volume is up about 19% compared to the third quarter of 2019. But the Fed can't keep this up forever. Since they started the program in March of last year, their balance sheet has doubled to more than $8 trillion. Putting all this money into the economy has a downside risk as well. It tends to spur inflation. And the current headline inflation rate is 5.4%, up from 2.3% before the pandemic. So basically, this round of quantitative easing has done all of the things it's expected to do. And last week, the Fed announced it will start to wind the program down. They'll do this by slowly reducing or tapering the amount they purchase each month. In November, they'll reduce their acquisitions by $15 billion to $105 billion. Then in December, they'll take it down another $15 billion to $90 billion. Going into 2022, the Fed plans to maintain the pace of reduction until it's fully wound down by June. But they did leave the door open to changing the plan as needed. So what's this mean for commercial real estate? First, Jay Powell telegraphed this move very well, so there's no knee-jerk reaction from Wall Street like the taper tantrum of 2013, and that's good. And interest rates barely moved when the announcement was made because the change was already baked into pricing. Investors anticipated a taper, so rates started to climb last September. But as the Fed eases back its purchases of these financial assets, there will be less buy-side pressure, so rates will naturally migrate higher. That could all change, of course, if there's some sort of shock to the economy that causes a flight to safety or something like that. But in general, tapering quantitative easing should cause a steady rise in interest rates over the next 6 months or so. As I mentioned, it's possible rates will go down again, but the odds-on bet is that they will rise. I don't think the increase will be huge or fast, so it probably won't notably slow commercial real estate transaction activity. There is simply too much capital looking for yield to expect a slowdown. On top of that, commercial real estate is one of the best inflation hedge investments, so I expect capital flows to remain strong at least over the short term. But any investor still floating interest rates may want to lock it in very soon, and anyone considering refinancing should probably get that wrapped up as well. Fortunately, investors appear to be taking the Fed taper in stride, and the financial markets are currently happy. But investors always need to be vigilant, and we need to keep our eyes on the horizon.